Hello, and welcome to the October Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. I'm pleased to report that once again, September was a great month in the financial markets. All three of the U.S. indices were up by pretty good amounts. Developed markets around the world were up, and even emerging markets, which were down a bit this month, actually did very, very well for the quarter. For the quarter, in fact, we see U.S. markets up substantially. We see emerging markets up even more, in fact, doing the best of any group. And we see developed markets doing well also. In other words, around the world, it's been a good month and a good quarter. And this is a little bit surprising when you think about it. Because here in the U.S., for example, we've had three of the worst storms in history hit us, and hit us hard, do a tremendous amount of damage. In Asia, we see the North Korea crisis ramping up, launching missiles over Japan. Credible talk of nuclear war. And we have to ask ourselves, what's going on? Why are we doing so well? And is it likely to continue, or is the bad news going to catch up with us? Well, I would say this. When you look at the fundamentals of the economy, we're actually doing well, and markets are responding to that. Here in the U.S., we saw second quarter growth up by a little bit more than was expected at a reasonably healthy level. We see consumer confidence high. We see business confidence high. In fact, we see businesses starting to invest more, which is a very positive sign. The Fed indeed came out with a much more confident than expected statement at their last meeting saying, yes, we really think the recovery continues and is solid. We see the same thing in Europe. Confidence there, both business and consumer, is at multi-year highs. We see the same in China. Chinese growth appears to be very healthy, against some worries we had earlier on. Around the world, we're seeing synchronized growth in a way that we really haven't seen since the last crisis. And this benefits everybody. When we look at companies, for example, they're making more money. We've had 2 quarters of strong profit growth. We can expect to see another according to what the market thinks right now. This is very positive. In other words, the markets doing well are a rational response to what's really going on in the economy, rather than the headlines. Now, does this mean we're out of the woods? No, it doesn't. We have seen some weaker data here in the U.S. For example, housing seems to be pulling back a bit. Industrial production dropped a little bit. But there you have to remember, a lot of this data is due to the hurricanes. It only makes sense that housing sales, for example, would drop if a hurricane's rolling in. It only makes sense that retail sales might pull back a little bit if there's a hurricane. In other words, the data we have right now is very affected by the hurricane, and we need to look through it and realize that going forward, things are actually probably going to remain solid. Do we know that for sure? Of course not. But there is reason to be confident, and there is reason to be cheerful. And we will talk about it next month and see how we're doing. Thanks for watching, and I'll talk to you next month.